Ladies and gentlemen, welcome to the Big Tech Frenzy. I appreciate you guys accommodating this different time schedule today. It was a busy day, but nonetheless, we are here to come to talk stocks. Okay, that's why we're all here. And more news on Tom Lee's BMNR, more news on Nvidia after earnings, and of course, more news on SoFi. What is SoFi without a little bit of pressure and assuming that potentially the CEO is selling stock or that other members of the company are also selling stock? Okay. Gotta have, the yin with the yang. All the benefits come with the naysayers. And that's what we're going to talk about today. So, ladies and gentlemen, strap in because we have 1 hour to talk about all these sort of different changes today, along with, to get ready for the FinTech Friday show, which is actually going to be Thursday today. So a little bit of a different change. I already see a comment here. CrowdStrike, represent. So tomorrow, I think instead of a FinTech Frenzy, or a tech frenzy, I think what we're going to do is a breakdown of a new company on Fridays. I think CrowdStrike is going to take that name. There's a couple names that I have been working on and juggling, but CrowdStrike, I think, is the one that I definitely want to talk about. Because I think it's out of the names that we're talking about, other than Meta, which was going to be another episode as well, it is one that I'm heavily thinking about purchasing. Okay? That's the thing. Sup, Tanner. Amit sent me. I mean, that's like everyone else here, right? Amit sent you guys at some point or another. But yeah, no, happy you're here. Okay. So there were a couple different reports that ended up coming out today where people had suggested that, either the CEO or other individuals were selling stock in SoFi. So let me go ahead and bring this up really quick, and then we can talk about it. First off, we have George Thompson here. And he is a director at SoFi. And what you see here is a quote unquote selling of SoFi of 154,000 shares of SoFi. However, if you actually look at the code, it's not an S, which is the usual code for selling a stock. It's actually a G. That's because it's a gift. The transaction involved a gift of securities by the reported person. And so this is actually being sent to someone else. He's gifting shares. He's not actually selling shares. It's going from one hand to another. So there was a little bit of confusion there that I just, immediately we can clear up. And then the next one was Anthony Noto. Where Anthony Noto, it's not a sale, okay? It's just the amount that he might be selling. This was what happened last time. He ended up essentially, receiving a loan today to receive money for the stock. I think last time it was 1.5 million. This time it's another 1.5 million. However, the price ranges last time, I don't remember the exact amount. I know it was $13.30 if it went to a floor price. What I'm trying to describe here is how many shares of Anthony Noto's stock would be sold to repay the loan that he had once taken out, which was actually with Goldman Sachs. Okay. And so before, there was a price range between if the stock was at $13 or I think the upper bound range was 33 or something around there after a 2-year period. Okay. That happened probably 8 or so months ago, maybe 9 months ago. Okay. At that time, if the stock would have fallen below $13 per share, they would still only be able to take out the amount of shares that are worth $13.30 in order to repay that loan. On the other hand, it would have been negative for Anthony Noto, protecting Goldman Sachs' side, that he would have only have given them a certain amount of shares if it had exceeded $33 or whatever the amount was back then. This one's a little bit different. See, the floor and the cap on the ceiling of the amount of loans that needed to be sold in order to repay this loan that Anthony Noto is taking out, a cash loan that's being backed by the securities that he ends up holding, is now at a floor price of $18.21 and a cap price of $49.18, which essentially over the next 18 months or 2 years or whatever it is, 2028. He has till 2028 to repay these. Is that Goldman Sachs thinks that this is a rough fair value on the company. So it's good that the floor has gone from 13 to 18 and the upper bound range has gone from 32, 33, whatever it was, to 49. Okay. Which is greatly beneficial for Anthony Noto as well. So here's the thing. People always say, oh, he doesn't need cash bonuses. He doesn't need these things. He's already rich. Okay. People always say this. But no, clearly he still does require some cash to run, his life and the things that he wants to do with, himself, his family, whatever, things he gets himself in or whatever he gets himself into. But he knows that the stock is going to be worth more later on than it is today. So he doesn't want to sell stock. He thinks that would be ripping himself off. If he can get a loan today and then end up selling the shares by 2028, they're probably going to be worth a lot more. And so he can sell the amount of shares needed to pay back this certain amount of cash. Okay. So if it goes up, it's going to be greatly beneficial. He's essentially holding on to the shares and hoping that they'll be worth more later on to have to sell less shares while still, receiving the same amount of money. Noto's playing chess. I mean, this is the thing people don't understand. He is a capital markets guy. Okay. He is a true, banker in that sort of respect, or investment banker, where he's going to play the most complex strategies in order to, make sure that his tax situation, the amount of shares that he's getting, optimizing the amount of money that he ends up receiving for his own personal wealth. But just realize that's the same guy that's making all the decisions at SoFi as well. He's not quick to make judgments if they're not in his favor with, corporate cash as well. So this is the same guy that's making all the deals at SoFi that also has these types of strategies. So, do I like that Anthony Noto is looking to sell shares? I mean, I'm indifferent about it, but obviously he will need some money eventually. I mean, that's pretty clear. Okay, next up, and by the way, even whenever he gets his performance-based stock units, they're still in stock units, right? So even if he's very confident in the fact that he's going to be receiving a bunch of shares, that's not cash. So if he receives a massive performance bonus, expect some level of selling during that time, because that's his whole paycheck, So yeah, everyone gets a little bit critical on the selling of CEOs sometimes, when really it should be the buying that people focus on much more often. And Anthony Noto was a big buyer at much lower prices than today. Speaking of purchases from not just CEOs, but presidents and insiders in the company, Opendoor's president buys $128,000 worth of shares, and the stock is up in the after hours. 30,000 shares of Opendoor. That's kind of interesting, eh? Not a company that I'm buying nor following. However, I did see that news and I thought, you know what, for a meme stock, that adds some confidence. I mean, the retail investors are going to love that. Piyush, gifting to buy SoFi shares for the community portfolio. Thank you, brother. I really do appreciate that. Let me take a screenshot of that, make sure we update it. By the way, all the purchases and everything are updated and added to the portfolio. So that's the only one that's not right now. He's earned the right to sell. Absolutely. We've gone from 4 to 24 or 26, if you want to call it that, in short order, which was great, or more like 7 to 24 in short order. But he was actually, I think his lowest purchase was like 454 or something, like cash purchase in the market. He ended up buying in the fours. The CEO. Pretty freaking amazing, if you ask me. SoFi, I got, but I keep hearing $25 is key for executives to get bonus. It's true. They need to sit at an average weighted share price of over $25, $35, or $45 to get different tranches of their performance-based stock unit. So if it gets to above 45 and waits out that 60-day period by June of 2026, they will make all three bonuses. They stack, right? But if we only get to 25, then he only gets one of those, and the other two essentially get burnt, and the diluted share count goes down. Billy Jack says, Tanner, Billy, what's up? How you guys doing? Okay. Piyush is responsible for most of the buys in the fund. I mean, he definitely likes to do a lot of different purchases. That's for sure. It's not just SoFi. If you look at what Piyush has put into the the portfolio, he put in like I think 10 different names. Obviously, you can tell what people are interested in sometimes whenever they donate and they want you to or they want me to add to those companies. But it's a lot of SoFi recently, which I am so grateful for you guys picking companies that I also feel very comfortable holding. Yeah, it's a fun little game that we're able to track the actual performance, as long as the company actually goes up. That is, but I think we're still green on SoFi shares. Let's see. Let me bring up the community portfolio. We'll take a look. I can't imagine we're not after today's movement, but still, we have had some hot like we're buying now, and the portfolio is not very seasoned, right? So we don't have a lot of purchases that were much lower in like $7, $10 ranges because we only started at July 8th. But we're starting to make a recovery. I mean, we were down bad for a little bit. Things were looking red, but yeah, I mean, nearly down 15% at one point, which is heavily weighted towards SBET. Now, like I said, I'm not even mad about that purchase. And in fact, I've been adding to, BMNR and other Ethereum plays. So I'm on the train, but we need to talk about that name as well today. SoFi up 4% in total. Yeah. SBET down 50%. That was a pretty large donation. For it to be down 50% is crazy. But that's just how the cookie crumbles, right? That's what happens whenever you buy speculative bets. Yeah. I still have hope that we end up returning. But it is much easier for me in my own portfolio to buy at 19 than it would have been to buy at 37. That's for dang sure. But SoFi, I mean, man, we're up 20%. That's actually just freaking amazing. So just between the times of July 8th till now, while also DCAing up the entire time. Pretty amazing. Pretty amazing. Okay. Speaking of, I brought up BMNR, and I wanted to talk about Tom Lee's comments that he ended up making on Wilfred Frost's new podcast, the Master Investor Podcast. This Wilfred Frost is from Sky News now, so he has his own podcast as well. But just look at this. Oh, we just got an SBET donation, so we are going to be buying that dip. JT, thank you so much. Yeah, very kind of you. Thank you. Let's go ahead and listen into Tom Lee in this podcast, because he is more bullish than I think we've ever seen him, and that says a lot.
Are we very early in a new bull market? But we've obviously had a extended bull market already.
Yeah, I think that's what confuses folks, because I would say generally we've been up since 2020, but we've had two 20% declines since. So in fact, this has been a really disrupted recovery since the 2020.
I'm not even kidding though. I love Tom Lee. I've never seen a haircut like this in my life. This is you have to be a genius to have this level of hair, and no one cares because he's just genuinely getting everything right. You know, but this is something else. It reminds me of the toupee scenes from Wolf of Wall Street. Whenever they mess with the one guy's hair and he's wearing it all sideways. But Tom Lee, I love you. I'm just picking fun. You make fun of the people you love the most. Okay, appreciate you. Shareholder of BMNR. Just remember that at the shareholder meetings, I'll be there. Okay.
20 lows. So I think we are in a new bull market because we just had another essentially wipeout that happened February to April this year. I do think that the bigger story arc is that there is a big surge in U.S. prime age workforce. That's the millennials and Gen Z. Plus, they're inheriting a lot of wealth over the next 20 years, which is going to be transformed into more equity exposure, less credit. And the third is that the U.S. is at the center of a lot of the major structural changes taking place, AI and now blockchain. But those are going to really boost financial sector, which could re-rate to like 40% of the S&P. And then, of course, healthcare could benefit. So I think there's a lot to be excited about. And 2035 sounds about right. That would be a 10-year bull run from here.
Did you guys get that? There were a couple tidbits in there. 40% allocation into financials in the S&P 500. A 2035 bull run between now and 2035, a 10-year bull run, largely because of millennials and Gen Zs that will be a part of not only a major workforce development, but also a great wealth transfer as well. I don't even think it's that crazy. I mean, if you were to imagine what has happened in previous cycles, people are trying to call the top every single year. Okay. So this is why I remain bullish. People try to time those things. I think it's impossible. But maybe September has a bad time, but that is an annual thing. Yet people still talk about multi-year bull runs. So if he's talking about a greater, greater scheme here, then it could very well be true. Now, does it happen with Ethereum running, Bitcoin running, multi-asset class bull run for the next decade? I'd love to see it, but I think that's maybe a little bullish for some people to just take in on its own. Yeah. Okay. Now, by the way, anywhere you look, someone said Tom Lee is at a lack of sleep. You're probably right. Anywhere you look, he is being interviewed or on some podcast. So I think he's just back to back constantly right now. You can't get enough of the biggest name in finance right now. That's for dang sure. Okay. Speaking of some of the biggest names in finance, we need to talk about the great and powerful Brad Gerstner. Brad Gerstner is a major investor in many, many tech names, especially Meta, Nvidia, these sort of names in like Tesla, for example, as well. But his second largest name is Nvidia right now. Okay. He loved the quarter that we just saw. And I want to show you an interview with Brad Gerstner that just ended up happening. So we're going to listen to a few minutes of this in two different segments. So we have one here. Let me bring this up. Okay. Let me get all that sorted. And then we'll listen to another segment, just cutting out some of the commentary from the host. Not that I have any problems with what they said. It's just, we're on a time crunch here.
Jensen said, when he was on our pod last year, he said, we think the build out. Jensen said, when he was on our pod last year, he said, we think the build out between now and the end of the decade is $2 trillion of total compute. Last night on the call, they said 3 to 4 trillion of total compute. He told us that inference was going to 1 billion X, right? Why do we have this massive build out? because inference time reasoning has led to an explosion in inference. Think about this stat. A year ago, Google per month was doing about 9 trillion tokens a month in terms of inference generation, right? Compute generation. Today, it's 980 trillion tokens. So from 9 trillion to 980, it's a 100x increase in a year. You have to build compute in order to do that. So the world is massively supply constrained when it comes to compute. They're 50, he said yesterday, the world will continue to grow at 50%. So think about this. If you grow, and people ask him, are you going to grow at 50%?
Oh, I'm muted this whole time. Okay. What I was going to say, sorry, muted, is that 50% is absolutely insane for an AI market that they are playing in. Okay. That's not the only market that Nvidia plays in, but it's by far the largest, and they are by far the largest player in that market. 50% growth rates for a $4 trillion business. I cut them off a little bit, but let's go ahead and just finish this because, yeah, absolutely insane. If you need to back up and look at the total picture rather than just what the Wall Street investors end up saying, oh, well, it missed by 0.5% on the data center revenue. And the guide was not as great as what we would like to see on our most bullish whisper estimates. Guys, listen to what Jensen is saying, and then you tell me whenever that doesn't come true. But so far, it's happening.
Oh, and people asked him, are you going to grow up 50%? He said, well, I think we're going to maintain market share. So the consensus for next year is 250 billion of data center revenue. If they grow up 50%, that's going to be closer to 300 billion or closer to $8 a share, right? And $200 at $8 a share, is about 25 times. So below market multiples in terms of PE. So here's a company that I think is hitting on all strides, has an incredible leader, and I think they delivered the quarter they needed to deliver.
Let's talk about a few of the issues. Jensen Huang said that bringing the...
I'm just going to skip through this really quick. We're just going to go to 442.
And the president himself has now signed an executive order that says we need to accelerate licenses and we need to accelerate the US AI stack around the world. It's existential. We want more market share, just like we wanted US internet companies to win around the world. We want American AI companies to win around the world, and you can't win around the world. And Jensen has made this point time and again, and it's true. China is 50% of the AI researchers in the world, right? We want Tesla competing in China. We want Apple competing in China, and we want Nvidia competing in China and winning over the hearts and minds of those AI researchers. If we cede China to Huawei, it makes it vastly easier. And we already know the U.S. has underestimated Huawei's chips. It makes it vastly easier for Huawei and the very, very sophisticated model ecosystem they have with things like Quencoder or things like DeepSeek to win around the world. And so the U.S., I think, was going too slow. We're accelerating. But this is a reminder that we need to do it. And we see some of this wrangling going on in Washington. But I think the president, he said again yesterday that he has a great relationship with Xi. I think we're going to get a big deal done with China. I think it will include Blackwells in China, and it needs to include Blackwells in China in order for the U.S. to maintain the lead. So remember, the numbers that I quoted at the top of the show, Scott, all the guidance for this company excludes China. China is a $50 billion market for Nvidia unto itself. So I believe that the probability they're going to be able to sell chips in China is north of 50%. They already can sell H20s in China, and I think they ought to be able to sell a competitive Blackwell, deprecated Blackwell chip in China as well, and I think they'll be able to.
And as a...
This is the thing, okay? Whenever we ended up getting banned to sell H20s in China, I got laughed out of the park whenever I said that I thought that it was a terrible policy deal. I ended up tweeting about it. It was like one of my most viral tweets, and that doesn't say much. It viral is such an interesting word whenever I'm talking about my tweets. I mean, just okay for what I end up putting out there. We're not talking emit levels here, okay? But whenever it ended up getting banned, I said China has an unbelievable want to win in this market. And the idea that we are, or China is multiple years away, 5-10 years away from Nvidia is crazy talk. Okay. I said, if you back them into a corner, they're not going to stop trying to, win in artificial intelligence. They're going to find new breakthroughs. Okay. So with advanced lithography, I said that terribly. With advanced lithography, obviously, the US has a great advantage, but that doesn't mean that new breakthroughs can't be found. And what we're seeing right now is that the new chips that are coming out of China are looking more and more advanced. And what you do not want to see is that those are the chips that end up getting sold out to the rest of the world, to Europe, to the Middle East, and all of these things. And then we are writing code one day that is actually on a Chinese tech stack. The United States has benefited greatly, and the markets have benefited greatly because the biggest companies in the world were the front runners of the internet, and it was all written by American companies in Silicon Valley. Okay? That was a great benefit for the United States, and I hope and pray that America opens itself to sell chips to China. Now, I'm not the only one thinking this anymore. It looks like this is now the big craze. Who is the AI czar in the United States? David Sachs. This was posted. This is how serious this is. This was posted hours after Nvidia ended up doing their call, and Jensen Huang talked about how important it is for them to be selling into China. Many in Washington need to update their assumptions regarding Chinese semiconductor manufacturing capacity. According to the Financial Times today, China companies like Huawei, MSIC, and Carbricon are surging production. They will soon be competing with American chips globally. Fortunately, Chinese chips are still behind ours due to a far-sighted decision by the first Trump administration, yada, yada, yada. I don't care about all that. Don't care about the Biden diffusion rule. I care about today. If we look around the world in 5 years and see that the global south is running on Huawei Cloud Matrix plus DeepSeek, for example, that's not the outcome we want. Thank gosh. Unfortunately, to David Sachs, he was the same guy that said it was a national security threat and, not long ago, supporting the ban whenever it happened. And now he's supporting the unban of whenever it seems like the right thing to do. And Trump has given him the okay. But essentially, this is something that needs to happen. And just think about this whenever you're thinking about the opportunity of either holding your Nvidia stock or purchasing more. The United States is literally going to look at them as a national security asset. We need Nvidia to win because we need American companies to win. Okay? They are by far the biggest player. This also involves AMD and also makes me want to get involved with AMD as well. But the idea that another country could be potentially catching up to the, technological sophistication of United States tech is, especially in the form of artificial intelligence, is true national security, not selling them our products. Okay. Selling them our watered down version of our products, which at the time, Howard Lutnick and all these guys said, oh, these are the most powerful chip. The H20s are the most powerful chips in the world whenever we were selling Blackwell NVL 72s, like the GB200s. Okay, so yeah. Who could have seen this coming, right? Geez, that's the only thing that I'm saddened about, because I've got people's names in my head I'm not going to say out loud because I do respect them, but boy, oh boy, were they wrong. He's Canadian, I think. Ha ha ha. I'm part of North America. I want us to win. I don't want to be running my version of my career on a Chinese version of a YouTube. So I greatly want America to win. I'm I'm very patriotic in that way. You guys are, my biggest allies. I look at you guys like brothers. You don't have to see it that way, back, but I got your back. Paul says Tesla for the win. I will absolutely add Tesla, Paul. Thank you, brother, for the donation. David sucks. I don't think that's true either. I just think that he can be a little bit like, what's the right term? Like mirandering. Like he will do exactly what Trump wants him to say, but he is actually pushing the right policies for blockchain and AI. I think a lot of the policies that ended up getting through that I think benefited my companies the most were almost single-handedly designed by the team that David Sachs is in, because that's where the majority of my portfolio lies, is in crypto and artificial intelligence. So his policies are the ones that I look at most importantly. And coming from Craft Ventures, I think that those are the types of things that I really care about. Meandering. Thank you. And Google, says Paul. Thank you. Appreciate that. I'll add it to the portfolio, and hopefully we can get back to positives on that portfolio. I think we definitely will. Tanner, I'm proud to say that with today's big purchase, Nvidia is now 40% of my portfolio. Twinning. Look at us go, eh? Look at us go. Paul is making the portfolio great again. Yeah. Make the portfolio great again. That's the new campaign. That's so funny. Guys, I've been saying, I knew we were going to get a lot of degen plays, which is funny because they actually don't seem to be in favor. Maybe I was a little bit early, very early on in this year, where I said, no, I'm actually going to stop investing in these smaller names and put a lot of my focus towards Mag 7. And I could have been even late on that decision to rotate a lot of my money into, and I don't just want to say Mag 7, but quality Mag 7 names. Okay. But I think everything that I ended up doing there is going to benefit me, not only during the time frame of me transitioning my portfolio to more serious tech names, growth names, but also looks almost like flights of safety. So yeah, their massive businesses are so flexible on the way that they make money, and their margins are so huge that they can end up pricing out competition if it comes down to a threat to their business, including companies like Nvidia, for example. We're talking about 75% non-GAAP gross margins. Like, that's where they're heading to by end of year. These are not small numbers. Okay. I sold my Nvidia to buy Google. I don't think that that's necessarily bad. I think that the total addressable market, like if what you just heard from Brad Gerstner is true, that we could potentially be going from expectations of $250 billion in data center revenue sales to $300 billion. That'll be a massive beat, let alone what can happen on gaming. That's just the 1-2 punch. Stop yapping about I'm with you guys and buy some Alibaba stock with this. Well, unfortunately, the minimum purchase is $10 USD, and that's a Canadian $10. That's what, $4? So that's definitely way under the necessary requirements. So unfortunately, Tevis, we are going to have to. I can't put that in the portfolio. So thank you though. I could definitely refund you that money instead. No, I'll put it in. I screenshotted it, and I'm just kidding. Yeah, scammed. What are you gonna do about it? I'm always coming over to your house. You don't know where I live. Let Timmy Cook buy some Apple, good sir. I don't think that this is a bad purchase. Okay. I'm all right with Apple right now. If they continue to put up the quarters that they did last quarter, I'll happily accept, Apple. Thank you so much. But whenever I do say quality Meg 7 names, I don't, I don't know if I put that in there. Yeah. No, I'll take Apple. I do think that they can do well. It's just, I'm really big in the artificial intelligence names, and they seem to be giving up their lead there and instead paying other companies to do that. Now, Apple, which is rightfully said by the bulls often, is that they don't rush into being the first mover. And so they could always set something up later on, which is true. They have been purchasers of Nvidia GPUs recently. They bought about $1 billion worth of GB300 NVL72s. Maybe they end up building out something and try to create something into the near future, and they're still sort of in a research phase. Whatever. I don't know. Off topic, do you prefer, I'm going to assume Wealthsimple and Questrade? Also, much love from Vancouver, BC. Have you ever been out to Van City before? No, I've never really been anywhere other than Ontario. I've been to more places in the United States than I have been in Canada. I've only, if you drew a radius where I've been in Canada, it's tiny. I live in Toronto, and I only really ever go south in Canada, which, if you guys are looking on a map, there's nowhere to go south. There's nowhere. But if you were looking on a map of America, I'm starting to fill it in. To your actual question, do I prefer Wealthsimple or Questrade? I prefer Wealthsimple, but that's mainly because it's sort of a one-stop shop for me. So that's quite interesting. Now, it could be more like a Robinhood versus SoFi type thing, and Wealthsimple more fits into the SoFi type environment. Maybe why I also like the company so much. But Questrade's starting to get better. They're offering commission-free tools, really good pricing for options and stuff. So maybe that's a good option for you. I wouldn't know though. I have not used them enough. 22-minute warning. Thank you, Reese. I appreciate you keeping me on top of things. Ladies and gentlemen, in 22 minutes, we got a long time to go before then, but we will be heading into our FinTech Friday show, which is actually on Thursday today. Not to scare anyone thinking that the weekend's tomorrow. It's not. You got to go back to work still, but there is some people in our show, some of the hosts, that cannot make it tomorrow, so we bumped it up. Okay. Now, quickly talking about the market, we ended up seeing a down day on Nvidia yesterday, but whenever we actually take a look at the changes from Wall Street, that's not what we're seeing. We're seeing people raise their price from 135 to 195, 206 to 210, 220 to 230, 200 to 215. Essentially increases across the board. 190 to 220, 185 to 225, 220 to 235. I can let you guys read the rest, but it was an unbelievable outpour of all of these analysts coming out to update their prices. Some going as high. Is that a new street high? 245? 250 is the highest. I didn't end up seeing. Oh, sorry. I didn't end up seeing 250. 212, 240 from Cantor Fitzgerald. It's probably an older report. So the most recent after yesterday Yeah, Loop Capital, that was before earnings. So the most recent after earnings was 245. Okay, cool. So looks like Wall Street didn't hate it all that much. And I sure as heck didn't. I think that in the broader scheme, if Jensen Huang thinks he's going to keep the same amount of market share that they have in the entire market, including China's going to grow by 50%, the administration is cracking down and getting extremely serious about the idea of, opening up Nvidia and other, they don't say Nvidia, but they say, semiconductor players, but they mean Nvidia and AMD to China. That's also very serious. And hopefully even getting Blackwell architecture out to China as well could lead to not only, the sales that we're seeing before, which Jensen Huang said is about a $50 billion TAM this year, increasing by 50%. Okay. So next year would be $75 billion opportunity for Nvidia. It's absolutely insane. Like, most businesses do not bring in that much revenue. That would be an add-on to what Nvidia is doing. That would just be a benefit to their guidance. Which, by the way, they said $54 billion of guidance, and the company or the stock was like, oh, we were expecting 55. Guys, what? We did 46 billion next quarter. They're expecting 8 billion more on top of that. That is a massive quarter-over-quarter bonus for the biggest company in the world. Not to mention the $60 billion buyback program that they just added because they have so much cash. They're generating so much cash, they don't even know what to do with it. Those are good problems to have. Where is Steve's projection? So yeah, this happened yesterday. Oh my gosh. Steve and Joseph Carlson, I guess, have been talking more and more about the Costco versus Nvidia comparison, which, to all fairness, I think the first person that brought me that idea was Steven. And then I started looking into it and realizing that the PEs just a few days ago ended up matching 1-to-1 at 56 times a trailing 12-month basis. That's no longer the case because Nvidia ended up just replacing their, 4 quarters ago quarter, like last year's quarter, with this year's, which was up, 56%. So now they're actually much cheaper on a, PE basis than Costco. And the stock went down. So fundamentally, it's cheaper. And we just got a pull forward of earnings. So they are much, much cheaper on a PE basis. Maybe I can pull that up on Fiscal AI. Let's see. New page here. So I'm just doing this on the fly. I haven't seen if it's updated on a day-by-day basis. It should be, but just to be safe. Okay, then we'll look at this all the way to the quarter. Yeah, okay. Here is I don't even know if it is updated because it should be lower than this, but I'll still show you guys. This is Costco versus Nvidia on a price to earnings basis, trailing 12 months. The blue is Costco and the orange is Nvidia. One company is growing by 9%. The other company is growing by 56%, expected to grow at 50+% year over year as well. And one has a 2.5% net income margin. The other one has, 48%? Now, that's just what I see looking forward. Now, obviously, there are some concerns, right? One company does not have many competitors. The other one is a major pawn in an ever-changing environment, potentially cyclical. There could be, a lot of change there. But Steven and Joseph Carlson have been going at it. Joseph Carlson ended up posting that Costco is more expensive for a reason, and that Nvidia is not that great of a business in terms of, Nvidia is not as sticky as Costco's business, and that Costco doesn't have any competitors. Now, Steven ends up writing this post. Absolute maniac, way too long. And he ends up showing the differences in, the total growth rates between all these companies, also including Amazon that does play in Costco space about, delivering products to users, having a sticky subscription business, these sort of things. But then he ends up showing up with, just the different comparisons in the pricing and the valuation of these three companies to show how expensive Costco truly is. Joseph Carlson says, hey, but you didn't answer very many questions like, for example, customer concentration risk. That boiled Steven's blood. Did you even read the post? You said I excuse the fact that Nvidia has customer concentration risk. Here's my second paragraph. Well, I agree Nvidia is benefiting from CapEx expansion from Amazon, Google, Meta, and Microsoft. Pause. Brad Gerstner also addressed this as well. He said, saying your four biggest customers is Amazon, Google, Meta, and Microsoft is like saying the United States' biggest customers are the Middle East, Europe, Asia, and South America. These companies are so big, they're bigger than a lot of countries. There is no customer concentration risk whenever you are selling to the biggest customers in the entire world that are like conglomerates of many different fields all put together. Ones that have been, promising that they have long runways for artificial intelligence as well. Now, he continues to go on about how they're caught in a prisoner's dilemma and that if one does not take off their foot from the gas, then they all have to continue spending. And that's what they're doing. Their capital expenditures continue to sell forward. Says Steven, to give you some further thought to this, what I think the real question is here is if you could convince me that Nvidia's long-term earnings power is predictable and sustainable as Costco's. Looking at near-term analyst estimates doesn't answer this question, and looking at current margins also doesn't answer it. Long-term earnings power is decided by perception of the business model, durability, and risk factors associated with the company. You should start by answering a few questions. Do you believe Costco or Nvidia has more long-term disruption risk? Do you believe that Costco or Nvidia is more cyclical? Do you believe Costco or Nvidia has greater execution risk? Do you believe that Costco or Nvidia has greater customer concentration risk? Now, Steven rightfully pointed out, by the way, I want to preface this by saying I love Joseph Carlson. Okay. I think he's an amazing investor. I've constantly reiterated this to Steve as well. I've got zero qualms about him in this point. However, those are the most cherry-picked questions to make you say Costco is leading those in those categories. Steve would admit, hey, if you're talking about customer concentration, if you're talking about which one's more cyclical, obviously that lends itself to be, in Costco's favor. But if you're saying, hey, let's not talk about revenue growth, let's not talk about margins, why? Why? If the growth that Nvidia can end up putting out would essentially lower their PE, so let's say they're both priced at 56 times, in a few years, at the growth that, assuming their prices stay equal, in a few years, the price to earnings ratio of Costco might lower down to 49 times, 45 times, something like this, where in those same few years, Nvidia could be at PE ratios that are below 10, below 5, because they're growing so unbelievably fast. So to say, hey, let's brush that aside, I don't necessarily think that's a fair statement. But I want to go back and just read Steven's post. Keep in mind, I am greatly biased here, and it doesn't mean that me and Steve are right by me having this opinion, okay? Joseph Carlson is a great investor, and it's just we have two differing opinions, and yeah, but I don't think any differently about him because he's taken that side. Steven might say different. So just keep in mind that his tone is not my tone, but I'm just going to read it here. Hello, Joseph. If it wasn't almost midnight, I would grab a coffee and write you an in-depth post, but at this time of night, I'll keep it short. Spoiler, I don't know what short is, but that is not short. Okay. But I'll keep it short. I don't even know where I'm at. And we could pick this up another time. I don't believe I'll be able to convince you that Nvidia's long-term earnings power is as predictable and sustainable as Costco because I can't predict the future. This is why I use the current numbers and analyst predictions on EPS and revenue for fiscal year 25, 26, and 27, since large groups formed the consensus estimate in those years. Also, your questions are written to favor Costco, but be that as it may, I'll answer them truthfully. Do I believe that Costco or Nvidia has more long-term disruption risk? First, what's the definition of long-term? Since we probably have different definitions, I'm going to say Nvidia would have more long-term disruption risk over a multi-decade cycle due to how quickly technology evolves. But at the moment, Nvidia's disruption risk is mitigated by a deeper moat than Costco. In my opinion, Costco faces ongoing disruption from e-commerce giants like Amazon, which could erode Costco's physical warehouse edge if online bulk buying scales further. Amazon already has a vastly superior logistics network than any other company. Expanding further into bulk would be a natural progression. By the way, talk about Steve's ability to write. I mean, this guy is truly, he is a true keyboard warrior. I mean, honestly. Amazon already has eroded a significant portion of the competitive landscape due to the amount of revenue generated from North American segment. I cannot go through all of this, though. I'm going to eat up my entire live stream, and we have to go in 8 minutes. So Steven will be on at 10 o'clock as well. He will end up joining, but I think that he gives essentially an unbelievable answer to Joseph Carlson's questions. And we got to get someone who does not have Costco or Nvidia to go through the different things to decide who they believe, is the quote unquote debate winner here. But I got to give it up to Steve, man. Joseph Carlson does not answer his questions at all, does not talk about revenue or margin expansion at all. He just talks about concentration risk, for which I think the customers that they are quote unquote concentrated to are not, that's not concentration risk at all. I don't know. You could say that about AMD as well, and they're not even the market leader, and they're still end up picking up a lot of purchases from the big names because they just need compute that bad. But yeah. Joseph Carlson is a conservative investor, meaning that he's more, he looks at a lot of the downside risks, obviously. And I think that that's fair to think that Costco does not have many downsides. But I think that there's a price to pay and that margins cannot be ever expanding. So if they're growing at a certain level, which is slower than the market is growing at, the S&P 500, where do you think their multiple is going to go to? If they have the strongest moat in the world, does that mean they're deserving of 100 PE on a trailing basis if they're still growing at, let's say, 9 or even 7%? So what is worth the multiple if you're going to be growing slower than the S&P 500? Even if you have the stickiest user base in the world. You know what's a sticky base? The Standard & Poor's 500. And I think that that's the benchmark that people should be investing against. Historically, a lot of Costco's gains have come from margin expansion, right? Going from 30x PE over the last few years to 50x has led to a great improvement in the stock. Not only that, but their EPS growth. So those two coupled things has allowed them to outperform the S&P 500. Nvidia is not even getting a benefit to their multiple because whenever you consider their margin and their revenue growth rate, they're higher than any other name until you're starting to look at companies that are like sub 30 billion. They're growing like a startup. You can look to Palantir, which has an unbelievable multiple, and Palantir can't put up the margins or the growth rates that Nvidia is putting up. Now, I'm not saying that they can't grow faster, but that's usually what should happen in the first place, is that a software name that is dominating software grows at a faster multiple than a hardware name that is benefiting from a software moat. Hardware names usually grow slower. So the fact that the biggest company in the world is growing like some of the smallest names or some of the fastest names is insane. That deserves a multiple for me. And it's not getting one whenever you compare it to Costco, a company that's growing slower than the S&P 500. Heavily biased. I've got, 40+% of my portfolio in Nvidia. But I'm doing that because I believe that we are looking at a boom cycle that is going to last longer than what people imagine. And every single improvement that we end up seeing from the models of Google or OpenAI or even Chinese models will end up improving the need for new chips from Nvidia. Don't be late, Tanner. I've got minutes, ladies and gentlemen. Minutes. Full freaking minutes. Yeah, so just to reiterate, back to SoFi. SoFi Technologies, Anthony Noto is taking out a cash loan and potentially selling shares into the future based on what the share price is later on. The floor price that he is willing to sell his shares in order to pay back this cash loan is set at $18.21. This is to protect Anthony Noto. And then the cap, or the sort of ceiling price, is $49.18 to protect Goldman Sachs. So they ended up, because obviously he still needs to get paid. A lot of his performance-based stock units is based in shares. So to get any sort of cash for him to purchase the things that he wants, he's actually doing the smart thing, saying he believes that the stock is going to continue to rise. So why would he sell today whenever he can sell by 2028, but get his cash today? Finish your water. It's like here. I've got like a liter left. I love how people say, sip your water. I will. This guy just goes, finish that water. Talking like I'm a chat girl and he's just donated. Finish your water. I'm not going to drink for you, bro. Chill. Relax. Someone said it's cola. It's not cola. I've opened it so many times for you guys. I actually put a lemon in it recently, but I'm going to end up spilling it all over myself. It's just water. Okay. So Anthony Noto ended up doing that. The other president that people ended up thinking was selling shares ended up gifting it to someone else. We don't know who that is right now, but that wasn't a sale either. They had transferred that money to another individual or another entity. And Nvidia is getting upgraded across the board. I think the American government's not taking seriously how important it is that they are able to sell into China. And there better be in the form of B30s, Blackwell chips. We ended up getting to hear Tom Lee talk about how he thinks this bull run will continue into 2035. I also wanted to talk about BMNR. We ran out of time, but BMNR, the actual price of the stock from a market cap perspective is actually lower than what they hold in cash in Ethereum alone. I continue to be a buyer. Their average price on their Ethereum is lower or is higher than where Ethereum is today, which is also why the market is a little bit skeptical. But their ability to acquire more shares is now up to $9 billion in cash in Ethereum alone. So very strong there. And Brad Gerstner's an absolute genius, talking about how he believes that the market is off. Instead of being at 250 billion per year, we are probably going to see roughly 300 billion of data center sales from Nvidia next year. Ultra bullish. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But you can come over to my other stream, which we're starting right now. I just need to get over there. It'll be 15 seconds. See you there. Bye now.